Hello and welcome everybody to the Gold and Silver Club end of week review for the 11th of October 2013, presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We will be analysing the week's performance. During the live session we are going to go over a summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week. We'll be doing live market commentary and technical analysis. We'll also be covering the week ahead, so key events looking forward, and of course answering any of your questions today too. So today's been a very interesting, this week has been very interesting indeed. The main headline news at the moment is oil gains and gold slips on the US debt deal Optimism. So this week we've had partial government shutdown in the world's largest economy hits its 11th day today. So yesterday, news of a possible deal to end the fiscal impasse that has closed the US government and fueled fears of a default led to a general risk-on attitude in the marketplace. And this sentiment allured traders out of the safe haven of precious metals into the US dollar. So we'll take a look at that very shortly. So gold this morning looking a bit weak. We've got some very interesting technical levels coming up too. On Thursday, so yesterday, the White House confirmed President Barack Obama would look at a proposal by the Republican Party to extend the debt ceiling for 6 weeks in an attempt to end the 10-day government shutdown. So the US needs to agree on raising the nation's $16.7 trillion debt ceiling by the 17th of October. A failure to do so could see the US government default on its obligations. If this did occur, it will have a serious impact on the global economic growth and result in higher interest rates for everybody across the world, according to the International Monetary Fund. On yesterday's announcement, the US dollar rallied to two-week highs. Gold price slipped as the risk of the US defaulting on its $16.7 trillion debt obligation was lowered, and this news presented commodity traders with highly lucrative opportunity to sell short gold, as highlighted in our top trades of the week. And there were also some fantastic breakout moves on oil. So in the other commodity markets, we had crude oil prices surged yesterday to hit 1-month highs on concerns over supplies from the Middle East on news that Libya's prime minister has been captured by rebels. So we'll take a look at oil as well. And looking ahead, the question really is now, how will the US debt ceiling affect gold and silver prices moving into next week? So we'll certainly take a look at the technicals very shortly as well. So before we do so, a little bit about the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Kelsey, professional trader, investment analyst and speaker. Now, Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we both appeared frequently on financial television. So that's a little bit of a snapshot of the Gold and Silver Club, guys. So moving on to gold, let's have a look at where the gold price is just this morning. So right now, trading at $1,286 per ounce, looking quite weak this morning. So we'll take a look at that very shortly on the technicals. In terms of seasonality right now, where we are in overall seasonality, well, typically from the second week of October, we saw this last year and the previous year, we do tend to see this is a weak time of year for the metals. So we are looking quite weak technically on gold already. And given if we do get the debt ceiling extended next week, we could certainly see some further falls in gold over the coming weeks. So we'll take a look at the technicals as well. But you can see here that typically October, moving into mid-October, is a weaker time of year. And we look at the technicals, you will see a resistance level that we've got quite a key downward trend line, and also some key levels that we just broke through yesterday as well. So we look like we're heading lower at the moment. So I'll show you that on the charts very shortly. Moving on to the US dollar index, we can see here where the US dollar index spiked this week. We have had a downtrend in the US dollar index. We have actually come to 2-week highs this week. Over the last 48 hours, we spiked up. So if we continue to find some feet with the US dollar index, if it does manage to get above this downward trending channel, we could then see again more pressure on the metals as well. So we'll be keeping a close eye on that. I'll just have a look this morning on our Reuters platform to see what the US dollar index is doing right now. Before we do so, just going to go through our top trades of the week. So we've had a lot of activity actually on gold and oil this week. So oil in particular has given a lot of day trading opportunities. So first of all, going back to Monday this week, we had a nice opportunity when we came up to a nice level of resistance on WTI. Nice setup that we had here once we broke through a major trend line as well. This was a sell at 102.80 for an exit at 101.74 for 106 pips, shorting WTI oil. The risk on that 60 pips, so $600 risk for 106 pips, $1,060. Profit on each lot traded there, so for a 2-to-1 on WTI. We also had a really nice setup on Brent as we came back. We retested some key moving averages and a resistance zone. So if you look at Brent oil, until yesterday, it has actually been channeling the last 2 weeks between very key levels of support and resistance, just moving between those levels, creating a lot of day trade setups. It finally broke out yesterday afternoon, but previous to that, earlier on in the week, we've had some really nice opportunities, and this was a break of a key level at the 108.43 level, got triggered at 108.39 and just came down to support a 107.52 for 87 pips. In fact, I'll show you that same trade again that we took on the oil inventories because we had exactly the same setup for exactly the same profit target and entry. So the risk on that was 45 pips, so $450 risk for 87 pips, so $870 profit on the trade for a nice 2-to-1 on Brent. We had gold this week. We had a nice sell short opportunity. So this was selling from 13.15 on Tuesday evening. We got a nice setup on this resistance channel, which you can see on the chart. We then produced a nice inverse hammer from there as well, and we broke the low of that the following morning. And you can see here where we came down nicely to 12.97 profit target for 180 points. So 100-point risk on that. So each lot traded $1,000 risk to make 1,800 for a 2-to-1 on gold. In fact, we're in a position, another position at the moment, which we'll probably update you on next week, which is another shorting opportunity at the moment. I'll talk you through that on the technicals shortly. Moving on to crude oil inventories, this was on Wednesday. So again, 108.43 level breaks, 107.52 profit target. So with the spread, we got triggered at 108.39, came out at 107.52 for a quick, well, it was 90 pips and 87 pips minus the spread there. So 45 pip was a risk, so $450 risk for 87 pip profit, 870 profit for a 2-to-1. But the thing about these trades is they're so quick. So we're in and out within our profit in about 45 minutes, which is fantastic. Crude oil inventories, actually, we reached our profit target within a much shorter time frame once we've broken through that 108.43 level. And then the crude oil inventories this week were over 6 million barrels in inventory, which was much more than predicted. I think it was 1.4 million was the forecast. We saw immediately, because there'd been a big surplus of oil in inventories, we saw immediately the price break lower and hit our profit target. And finally, WTI oil. This was a trade from yesterday, and that, for those of you who trade WTI oil, you might have seen this 101 level is providing extremely strong support here at the moment. We came within a whisker of being stopped out of this trade, but it held again. It's held now 4 times the 101 level of big tests of this major level of support. So obviously there are a lot of buy orders going in at that level, and traders taking profit on their sell shorts at this level. From that point, after the FOMC announcement, the statement which we had on Thursday, we then actually saw the market stabilize, and yesterday we had a huge surge late morning into the afternoon on WTI oil, and we came up to our level of resistance, our key level there at 103.24 is where we took profit for 198 pips, 30 points risk on that for $300 risk for 198 points. That was pretty tight risk to reward. We got over a 6-to-1 on that trade just yesterday, and you'll see actually it's just hit that resistance and it's coming back down again. So you can see it's just channeling very nicely between these key levels of support and resistance. So you're going to want to watch the 101 level, and if that finally does break over the course of this week or next week, we're going to see a lot of stop losses get triggered, and we'll probably see a nice, at least a dollar move down. But at the moment, that level is holding really well as a level of support. Okay, so what we'll do, guys, we'll move on to some live technical analysis. We start off, just look at the Gold and Silver Club Reuters news trading platform. So let me just share my screens. Okay, fantastic. So at the moment, you should be able to see the Reuters platform. So the bottom right-hand corner here, this is the US dollar index. You can see the big spike that we had this week to 2-week highs. Today, actually, the US dollar index, it's finding a little bit of weakness. Just today, you can see we're actually coming down ever so slightly. It's early days yet. It's only 11 o'clock London time at the moment, but you can see just got a little bit of consolidation where we are at the moment. So we're still in an overall downtrend on the US dollar index, so it's still got more work to do, but we did definitely have quite a big surge this week. You can see here the top movers of the day at the moment, the commodity currencies, New Zealand US dollar, Australian US dollar doing very nicely. Silver, fairly neutral today. Gold, the biggest out of the commodities there, it's the biggest loser of the day, down 0.6, as well as oil is getting a bit of a retreat today, and CAD looking fairly neutral. So we'll move over to the charts and we'll talk you through that now, key levels that we are currently looking at. There we go. So gold, we're very pleased to see this move on gold today because we've been looking for a break of this key level since last night. This is a trade setup that we are currently in at the moment. So next key level. So just this morning, for those of you who've been trading this morning, you would have seen there was a big inverse hammer on the daily on gold, and that we were looking for a next key level there, 12.76. Now we sliced through this with quite a lot of ease today, so we're coming down, and really the next level of support now that I wouldn't look to buy at the moment, certainly not. We're looking for the next level to come down, 12.52, and I mean that's going to be the next key level of support on gold. There's not really any support where it is now from 12.65. There's no reason for it to really find support here until we come down to roughly around the 12.53 level at the moment. So it's looking pretty bearish at the moment, below all key moving averages. We've got this this resistance trend line on gold at the moment. We know from the seasonality that this time of year gold gets very bearish. So we can draw a trend channel here just from you can see from the recent lows that we actually put in, although I won't keep that on my chart, but just to show you the sort of channel that we could be following here on gold if we were to mimic previous moves down, if we're going to mimic the resistance, the downward trending resistance here. But I'm going to be looking at horizontal levels for the time being, and the 12.52 level is definitely going to be the next level we're targeting on gold right now. So with that, silver is now a lovely move on silver. Silver's actually come down and just hit one of our profit targets at 20.95. So we also had a great setup on silver. We had from yesterday, we tested this 50% retracement level, Fibonacci retracement at roughly 21.56. We've broken through Fibonacci level roughly about 45 minutes ago, and we've come down and we've had a really quick short and sharp move just down to previous support there. So gold, especially silver, does move off key levels particularly well. That's for a 52 pip move lower there just to come down and hit our profit target, and we're potentially expecting more risk, more downside here on silver if we get a continuation. We're probably going to see some profit taking on this previous low at 20.95. We may come down to 20.83, 20.75. The next level which we would be looking to break then is going to be 20.75 for the next move down to 19.82. So lots of activity today. So let me just quickly remove this square here. Okay, so these are the key levels we're really going to be looking at. If we do get a breakdown below 12.52 here, I mean what we would expect on a normal sort of, because we're coming towards the end of the week, is that the US session now, got Chicago open now, New York open about an hour and 15 minutes ago. Typically we do tend to see session lows on gold around about 3 p.m.
BST, so between just before the UK market closes, when we tend to get the session lows in gold. So moving towards later in the day, when on the close of the market, we might see some buying before the Sunday open. Typically, for those of you who are commodity traders or seasoned traders, you will note that often on the Sunday open we can get some buying over the Asia Pacific session. So we could see a little bit of buying coming towards the end of the session today. But for the time being, we'll be looking at 1253, sorry, as the next level below. But I wouldn't want to hold short positions too much into the close today. There's going to be some day trade opportunities here, but you want to also be taking some trades or closing some profits before the close of the day to avoid any gapping on the Sunday open. Okay, so very much gold a day trading market. Gold's general average pip movement per day being circa 300 pips, so it provides a lot of day trading opportunities, and it does do a lot of retracement. So even if we come down and hit that level, we may get a retracement. Moving on to WTI. Wow, okay, so WTI has actually just broken past the 101 level. So the 101 level been a key level for WTI at the moment. It's just broken actually whilst we've been on this, just setting up for the webinar at the moment. So this is also a key level here, which you can see here over the course of the week that this level we have had lower highs here, and we've not really been able to carve out any major sort of support here on, sorry, we've not been able to get back above the uptrend here on WTI, to be specific. We've been below very key moving averages. We've maintained this trend channel here of lower highs at the moment. I've just got at the moment the November contract, so you can see all the data going back to August, but I've got all my technical levels based on historical charts here as well. So the 101 level that we've just broken past, that's going to be important. I will break that down now into the 4-hour time frame here, and watch to see whether we are going to get further weakness here, whether we're going to end up going from this 101 level back down to the next level of support. There's a level of support below at 137, and the next level below that, 99.29. Now this level has been defended, the 101 level, quite a lot. We've seen 1, 2, 3, 4 bounces off that over the past 2 weeks or so. So we could see certainly some more downside momentum now on oil, now that we're sitting right on that 101 level at the moment. Let's just take a look at Brent. Brent did have a breakout yesterday above the recent consolidation. Again, I'm just in the November contract, which might vary slightly. November contract is pretty much like for like in terms of the actual pricing that we've got on there. So 110.92 level that we're at the moment, this is a previous level of resistance. So this is actually quite important where Brent is right now. The previous breakout that we actually got yesterday is coming back to retest a key moving average actually on my historical charts, the 50-day moving average. We're actually just bouncing off at the moment. So if you do have historical charts, you can see that 50-day moving average we're bouncing off at the moment. If we were to close with Brent, given the current setup that we have here on the daily time frame, this actually represents a inside candle on the daily time frame, and we would potentially have some opportunities here to trade the break going into Monday next week. At the moment, really on Brent, my interest will be lying here with WTI to see if we're going to get further weakness here as we've broken through 101. So quite a lot of activity occurring just this afternoon. Moving across to the commodity currencies, New Zealand US dollar, it's failed again to really break out of this consolidation. That's really interesting. So New Zealand US dollar, we are in a consolidation zone here, which we've been in really for over the past about two and a half weeks now. We've just been in this big consolidation zone. You can go a little bit lower to also encapsulate there's a Fibonacci level and key moving average just below there as well. Really, in order to have any confirmed trade setups on this, we really want to see a break below a key Fibonacci level here at 0.8176, or a break above the resistance here, which takes us to 0.835. So continuing to channel here on New Zealand US dollar. If we close here below the key Fibonacci level, just above, later on today, this might start to show that we're going to get some sell opportunities moving into next week. We're starting to see some key moving averages cluster here, and if we get a close below those key moving averages, we could certainly see some downside momentum here on New Zealand US dollar. Australian US dollar, It has been working its way upwards. We're in a upward trending channel at the moment. We keep getting supported by the 0.93775 Fibonacci level. It has been a choppy ride. It's not been a smooth ride, but you can see just today actually we did hit one of our profit targets, which was the previous high of the week at 0.94852. We've continued to get rejection above this key Fibonacci level, and we've continued to stay above and close above key moving averages. So at the moment we'll see whether on Australian US dollar, whether this is just a retest of these moving averages before going higher again. If we can break above today's high and also Tuesday's high, we'll be looking at 0.95055 as the next key level of resistance. But you can see at the moment with gold coming lower, with silver coming lower, that's also the correlation there is with New Zealand US dollar, Australian US dollar, they have also been brought down a little bit by that. And in contrast to that, the USD Canadian dollar finding some support today. USD Canadian dollar has been quite a predictable trade in terms of, for those of you who follow some of the weekly technicals, we've got a massive dragonfly doji at a key level, which was going back about 2.5 weeks ago now. Since then, we've had some retest of a Fibonacci 0.2719, providing some support on the weekly until we finally broke out and actually hit our profit target just yesterday, which was at the 1.0414 level, the green Fibonacci level here just above. We do have a cluster of levels here which are providing support and resistance on USD CAD at the moment. What I would expect now is really probably a level of consolidation. We are getting some support here at a key 50-day moving average on USD Canadian dollar. We're finding resistance, and USD CAD is classic for after it's had a big move to start consolidating, forming a box sort of a setup and then enabling us to trade the breakout of that. So that could be really interesting. If we don't breach yesterday's high, yesterday's low, moving into next week, that provides us with a good opportunity for a breakout. So USD CAD, not too much action on that today, but definitely one to be looking at setups into the weekend, ready for next week. Also wanted to cover natural gas for you as well. We're just on the futures contract here for natural gas, so I've just transferred across my historical levels here. We did actually hit a key Fibonacci level yesterday, so same situation we saw with Brent breaking out, WTI breaking out. We got a big surge in natural gas yesterday as well. In terms of the fundamentals on natural gas at the moment, well, the price of natural gas has steadily been climbing this month, just in time for the start of the winter heating season. The heating season runs from October to March, according to the US Energy Information Administration, and month to date, natural gas prices have climbed nearly 5% now. So last winter, daily price for natural gas started their ascent in October, only to peak by late November, and natural gas seasonality could pan out similar fashion this year. So we're definitely seeing some profit taking at these key Fibonacci levels just above, and key resistance from yesterday roughly we spiked up to here about 3.792. You can see some profit taking here on the daily time frame where we just got a bit of an inverse hammer forming here. But really, so in order to get more buying here, we really want to see the market break above 3.8 level next week, get a bit of a breakout above this level and also above previous resistance level at 3.88. But above a break above this Fibonacci and a close above that Fibonacci, we could certainly be set for higher prices. Okay, so moving into next week, the major news that we have coming out is today we have CAD employment change. So employment change measures the change in the number of people employed. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. So that will affect anybody trading USD CAD, and that's important because the CAD is correlated also to oil prices. Later on today, we also have 2:55 p.m. and 9:55 ET. We have the US Michigan Consumer Sentiment. So the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. Okay, so you've got the preliminary and the revised. The preliminary data does tend to have a greater impact. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And of course, that's important because the USD is inversely correlated to gold. Moving into next week, next Wednesday, we have a US core CPI. That index measures the change in the price of goods and services from the perspective of the consumer. And that's a key way to measure changes in purchasing trends
and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And then moving into next week, we do, of course, have crude oil inventory. So if you are around during the day and you have availability to trade these announcements, very worthwhile. We caught a very quick 90 pips this week, or 87 pips if you take the spread away. So US crude oil inventories, that data report is 3:30 p.m. GMT every Wednesday, or 10:30 a.m. ET. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. On Thursday, we have US natural gas storage. So that's, again, 3:30 p.m. GMT, 10:30 a.m. ET. The Energy Information Administration, they provide natural gas report measuring the change in the number of cubic feet of natural gas held in underground storage during the previous week. So while that is a US indicator, it does tend to have a greater impact on the CAD as well, due to Canada's sizable energy sector. So that's important because the CAD is correlated to oil price. And next Friday is currently expected for the US non-farm payroll. So due to the US shutdown, non-farm payroll data is now expected on the 18th of October, and that measures the change in the number of people employed during the previous month, excluding the farm industry. So job creation, of course, is the foremost indicator of consumer spending and economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Okay, so those are the major news announcements we're going to be keeping an eye on for the commodities market and commodity currencies today and moving into next week too. So if you, of course, if you would like to take your trading to the next level and find out more about our exclusive live trading room program and our Gold and Silver Club exclusive membership packages, you can just find out more, just request more information on the Gold and Silver Club live trading room program. Go to www.jointhegoldandsilverclub.com or contact us at our London office at +44 0207 193 0403, or New York office at +1 646 808 0403, or our Johannesburg office at +27 11 083 8403, or of course email us at office@thegoldandsilverclub.com. And finally, do make sure you take advantage of our newsletter. So you can subscribe to our newsletter at thegoldandsilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, so yeah, if you do need to get in touch, do get in contact on the details on the screen there. Otherwise, we certainly wish you good luck for the rest of the day's trading. Have a great weekend, and we will see you at the same time next week. Okay, so take care everyone, and we'll see you on the next one. Take care. Bye-bye.